To the show today, we have with us Sanjiv Bajaj, who is the CII President, and joins us to talk about the economy and also what CII thinks at the moment about the sentiment and the way forward for Indian economy. Sanjiv, always a pleasure to have you on the show. Now, my first question, we are in a very, very difficult and a changed environment. Suddenly, over the last 1 month, the entire business environment has changed with central banks across the world tightening the rates as well as inflation really flaring up, and also the market valuations, the way they are going at the moment, it is spreading nervousness all across. How do you see the overall business sentiment in this scenario?
Nisha, it's good to be speaking with you, and I would look at this situation a little differently. Over the last 2 years, starting with the pandemic, we had a set of real new problems that came up, and action that we saw, monetary action, fiscal action that we saw, was the remedy that was being provided to take care of the problems that came up. With the exception of war at this point of time, we have over this 2-year period come to far greater control over this pandemic. Countries like India are starting to see already a couple of quarters of reasonably good growth. And as a result, we are at the end of that cycle of troubles that we started off 2 years ago. And hence, the additional support between the monetary and fiscal stimuli that we saw across various countries around the world is slowly going back to a more normalized situation. I would look at it that way. We do have this additional issue of the war, and let's hope that that gets resolved first, for if nothing else, for humanitarian reasons. But if not, at least comes to some semblance of a, if I could say, a normal life as far as possible, so that countries have a way to move ahead. And that's the situation that I see ourselves in today.
Right. So two aspects that I look at, apart from the liquidity tightening that you mentioned, is that India's, currency rupee has been lowering vis-a-vis dollar, and weakness in rupee as well as oil prices going up. That's a double whammy of sorts for the macroeconomic factors. How do you see that? And also, what should government do in terms of petrol and diesel prices? Because that's also putting a lot of pressure on the businesses.
As far as currency is concerned, as CII, we've always believed that water must find its own level. So currency must reflect our inherent strength. It's just that when we see significant amounts of volatility in the short term on the currency, that's what creates uncertainty, because as you know, whether it's imports or exports, one side gains, the other side loses. But contracts are made for at least a certain period of time, and it's volatility within those periods that should be avoided. And towards that extent, where the central bank is concerned, like they've so often done earlier, is to reduce that volatility rather than to focus on what the end number should be. So that I would say would be our at least suggestion from CII. As far as fuel prices are concerned, unfortunately for the common man, what hurts his pocket the most, either fuel or food.
Yes.
Both those have started going up. While so many parts of India are under this unusual heat wave, but what we're hearing is that we are likely to go through another normal monsoon, which means that should have its positive impact on food prices, maybe even in the next month or so. That leaves really fuel prices. And if you've seen fuel prices in the last few years, when fuel prices have stayed, international oil prices stayed low, taxes have been taken up. So we think there is an opportunity currently in a collaborative manner between central and state governments to bring taxation down so that you can help the common man with this one large burden of theirs. We also believe that it's important because as a country, we really geared up for the next cycle of growth. And any money that gets saved gets converted into consumption, which increases demand, and then it increases the investment cycle as well. So it has its own positive effect on growing the economy. So that's all we would suggest.
That's right. So that's a very big demand coming from the industry and a long standing demand also, Sanjeev. And apart from the oil prices, now many of the commodity prices have also been flaring up. So that's putting a lot of pressure. But you mentioned that good monsoon can ease some part of it. But being a part of one large business conglomerate, Sanjeev, you are in touch with all the business, other business houses. You know the sentiment at the top. We have seen animal spirits really come back after a little bit of COVID unlocking and recovery in the last 6 months. Many deals have also been struck. We saw one large wholesale deal also, where the big boys, for the first time, the strategic investors were so, keenly looking at it. Biocon made a cross-border deal as well. So, that showed that the animal spirits in Indian promoter class had returned. Do you think that these inflationary trends and also interest rate hardening and overall macros will dent that sentiment in the short term?
I think it's only transitionary. As you correctly said, we see the last 2 quarters, we've started to see tailwinds of reasonably strong growth. Private investment cycle has started in multiple sectors, not just commodities, but if you look at real estate and housing, if you look at transportation, you can see it there as well. To make sure that these continue, as CII in this year, we will recommend to the government a few more sectors to include under PLI, where we believe that, those sectors have both the capacity and the capability to produce for the world. In addition, we believe that like PLI, the government must think of a employee-linked or employment-linked incentive scheme for some sectors which employ a lot of people. On the manufacturing, it can be footwear, it can be leather, it can be tourism. So this would provide us not only with current growth opportunities, but also medium-term growth opportunities. And we recently, in our last large national council, which is the top 100, 120 members at CII, we did a survey less than 2 months ago, where over 50% of our members mentioned that they had already started the investment cycle, and another, I think, 20-25% were about to. So I believe that capacity utilization now is reaching the level where you will see this kind of continued new investment coming in. Of course, that war played a little bit of a spoil sport. And that's why, as I said, for not only for business reasons, for humanitarian reasons, I hope that gets resolved early so that business can start taking off.
Right. So PLI schemes and the focus of government on that, and that's a very big reform that government started, and that's what the focus is. But also, Sanjeev, in the short term, while the economy is suffering on various pain points, what are the reforms that could be suggested and what the government can look into apart from lowering the petrol and diesel prices?
So firstly, our own projection as CII is a 7.4 to an 8.2% range for GDP growth for this year. So let's be clear, we'll still be, if not the fastest, among the fastest growing large economies in the world. So the slowdown that we are talking about, I'm not seeing that slowdown. What I'm seeing is that the opportunity probably to grow by another 100, 150 pips is got pushed out a little bit just because of the externalities, the external uncertainties at this point of time. But I do believe that immediately addressing the fuel price issue for the common man is something the government should look into. We believe that farm incomes supported by higher MSPs will help the farming community, but the non-farm rural income side still needs some amount of support. So that is where we would like to see the government continuing to support. Beyond that, I believe it's only a matter of time. As I mentioned, multiple sectors are already investing, and you will see a change in that cycle.
Right. So, Sanjeev, one more question from the business point of view, from the businessman's point of view. Funding is the lifeline of every business. Now, the startup world had benefited a lot from the global money trickling in, and that has stopped. Our Indian markets also have seen an outflow of the FII money, right? And equity markets valuations have dropped. Interest rate is hardening on the other hand. So there is tightening of purse strings as well. In this environment, while growth projections for the medium term may be quite positive, in the short term, how do you see the businesses tackling the situation? Are you seeing cracks emerging already? Because funding is the most important point for the business growth, and both equity as well as debt looks tough in this environment.
That's again relative, Nisha. If you ask me, I believe in the last few years, because of this excess liquidity, there was actually too much money chasing too few good deals. And that's why one can argue that some of those valuations went beyond what was a justifiable mean.
Yes.
A good quality business model with a good team will continue to get funding. And this is not a 2 or 3 year issue. This is something we have seen over the last nearly 2 decades now, where startups have grown significantly in India. We saw, of course, a lot more unicorns come recently, and I think that's partly because of tailwinds in the way this entire ecosystem has developed. It is also partly because of some of the excess liquidity. So that goes down, but good quality startups will continue to get capital. What as CII also suggesting to the regulators is,
yes,
insurance has long-term money. Insurance money, part of that should definitely go to startups. It should also encourage longer-term investments into infrastructure. There are some tweaks that need to be made in the Insurance Act, which the industry has also recommended to the regulator to help do, so that you can then bring in domestic capital to replace at times foreign capital. And to me, that is a larger issue that as a country, we will have to continue to build on, that while we attract foreign capital, we must also keep in mind that foreign capital can come and go. While we must create the circumstances for it to keep coming in, but we don't control that. Domestic capital is here, and we have to see that as the country gets richer, more and more money from household savings get channelized into financial assets. And then those financial assets, which would essentially be with asset management companies, insurance, banks, get channelized into productive uses for the economy going forward. No strong economy in the world has managed that just on foreign money. You have to build a strong domestic financial services sector.
All right. So CII also pushing for more pools of domestic capital to fuel our own growth path. And that is very, very critical, because we can't really base our growth on hot money coming in and out of the country. Thank you so much, Sanjiv Bajaj, for joining us and talking to us about the macroeconomic conditions, and also the CII's, some of those agenda, as well as also some of the points mentioned which the government can look into in the near term as well as medium term for the growth of the economy. Thank you so much for joining us. Have a great day.
Thank you, Nisha.